Welcome to episode 2 of Trading Basics, Candlesticks. If you haven't seen episode 1, please check that out. We're continuing from there. Let's get into it.
You make me move, you make me dance, you make my heart beat super fast.
Okay, so in the first episode, we talked about what is a candlestick. Now we're going to focus on the different kinds of candlesticks and what they mean. Remember from the first episode, it's all about market psychology. Buyers and sellers, supply and demand. That's all it tells you. So let's focus in on a few candlesticks. So let's look at a few different types of candlesticks. So we got this kind of candlestick, which is, if you remember what I was saying, buyers come in right here. It's green. That means it closed higher than it opened. So buyers come in here. They push it all the way up pretty much throughout the whole day, and they close it at the top. This is considered very bullish. It has a big price movement, meaning the opening and the closing are pretty far away in terms of points, so they moved a lot of points. And it's bullish, it's green, the whole day, buyers, buyers, buyers. Now let's look at a candle like this one right here. So now what does this mean? This is considered a doji or indecision candle. That means buyers and sellers basically closed at the same point. They opened and closed at the same point. That means they couldn't agree, or they basically agreed that that was a good price right there. They couldn't decide if we're going higher or lower throughout the whole day, and there wasn't much price movement. It went up, it went down, but at the end of the day, it closed there. That's why it's kind of indecisive. You don't know which way it's kind of going to go the next day. Let's talk about this kind of candle right here, or these two together. So this shows you what? Again, buyers and sellers. So we open up here, we went a little bit higher, get rejected. There were no buyers there. Everyone thought that was a little bit expensive, and they sold off. They sold off all the way down here. Then they picked it back up and closed right there. Much lower than the previous day. We'll talk more about patterns and things later. But generally what you're going to see is this candle is bearish. But then the next day you get the exact opposite candle. Bullish. Again, price went all the way down here. Basically the same price it was yesterday. But this time buyers came in, supported it, went well past the open and closed it almost at the highs. Again, that's a sign that it's bullish. Market wants to go higher. There are buyers there. And if you see what happens after that, so if every seller here was bought up on the next day, you can see exactly what happened. We would then have a run up. Now this isn't 100% of the time. Nothing in life is 100% of the time. But once you start stacking up different candles together and you start figuring out patterns, you start to see these things and you start to understand the psychology of the market. So in the next Trading Basics video, we're going to talk about moving averages. Those are these lines here. Why are they different colored? What are they? And all that good stuff. Now, before I go, make sure to like the video, subscribe, share the video, favorite it, add it to your playlist, send it to somebody, burn it, put it on a mixtape. I don't know, do whatever you got to do. Enjoy the video, and hit the notification bell and subscribe. Always subscribe. If you haven't subscribed, hit subscribe. If you are a subscriber, unsubscribe and subscribe again. It's just good stuff. All right, see you next time.